evidence defined as the traduction of simplex text Hollywood in HTML 2000, 2010, 2010 reflects underlying agency problems within firms. Among these conflicts of interest between shareholders and creditors are particularly relevant. As tax avoidance can transfer wealth from the estate to shareholders while sharing risk to to creditors who bear potential losses without sharing in the gains. Tank in 2022 B2 and Jacob 2023, the liberalization of China's bond market by allowing foreign investors to trade domestic bonds not only expand firms' financing sources, but also introduce more professional creditors, potentially affecting firms' tax evidence decisions. Beside of this sharing, we examine whether bond market liberation can affect comparative tax avoidance. Bond market liber, the market liberalization is an essential component of China capital market liberation. Relative to stock market capitalization, Chinese bond market showed a sorry are scoring for approximately 90% in 2008 and 130 and 2017, catching up with the level observed in the United States for 2025. Previous stories have primarily focused of the effects of stock market liberation on firms, thinking that its promoters corporate innovation monthly at 2021 rose stocks price snapshots like the 2022 Elmierings litigation risk shown in 2021 regarding tax evidence Chan in 2023 and Chang at 2020 find the stock market opening significantly reduced firms' tax evidence activities in China since stock market liberalization and bond market liberalization introduced quality investors and bond investors repetitively. The two groups different in their investment objectives, risk preference and governance mechanics or proper difference from the existing literature on stocks market liberalization in several important ways. First, we focus on bonds in investors compared with equity investors who are residual claimers. Bond investors place were in paces of firms, cash flow, stability, and regulatory compliance, and therefore are less willing to support high risk activities such as tax avoidance. Second, from a theoretical perspective, the effect of stock market liberalization of comparative tax avoidance is ex ante and ambiguous because equally investors can both exert a governance effect and encourage firms to pursue short-term performance that could increase incentives from that evidence chain at 2023 in contracts or the theoretical framework highlights how bond market liberalization mitigates current holder creditor against conflict and promoters more complain corporate 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 liberalization introduce more liberalization of rights sectores sin límite de participación por to legal environment China market liberalization meaning shoulder creditors agency conflicts and promoters more complain corporate behavior. Dear domestic creditors have very limited participation in corporate governance due to weak legal environment in China. Late 2020, bond market liberalization introduced more sophisticated foreign creditors, which provides meaningful practical implementation from exchange gain the projection of creditors' interest. We posit that bond market liberalization could corporate tax evidence for three reasons. First, bond market liberalization facilitates cross-border capital flows and borders firms financing channels thereby alleviating financial constraints that may disgrace tax evidence condoned in 2023. Second, by introducing foreign creditors who demand more transparent information, environment, and stricter control over their full risk. Bond market liberalization enhances firms' financial transparency throughout 2025 and 2025, thereby reducing opportunities for aggressive tax planning. Third, the participation of sophisticated foreign creditors strengthens internal corporate governance and increases litigation pressure, generally constraining marginal opportunities in tax-related decision can at all 2010. This study contributes to the literature in several important ways. First, we contribute to literature on the economic consequence of capital market liberalization, while prior studies have extensively investigated the effects of stock market liberalization. Morshian at al. 2021 show 2021 the growing importance of bond market in comparative financial has received relatively little attention unlike the existing literature that examines how stock market liberalization reduced corporate tax evidence change at 2023, change in 2020, or a study highly hangs that bond market liberalization brings in foreign creditors who place greater emphasis on firms' regulatory compliance and help reduce tax evidence by meeting shoulder creditors agency conflicts by focusing of China's bond consortium program. We provide provide experiential evidence that bond market liberalization effectively curbs corporate tax evidence. Second, we contributed to tax evidence literature by investigating the critical role of foreign creditors in mitigating against conflicts. When creditors have a stronger monitoring capability and greater incentives to exert governance, the opportunistic behaviors arising from creditors, shareholder against conflicts are reduced. Our findings how show that creators help curbs corporate tax avoidance by easing firms' financing constraint, enhancing ensure credit rating, and strengthening international governance. These findings promote important policy implications, suggesting that bond market liberalization not only strengthens corporate disciplinary in China, but also offer valuable insights for other emerging economies seeking to attract sophisticated foreign investigation and improve market efficiency. The China's corporate bond market and Bond Connect, China's bond market has grown into the world's second largest with two main markets for corporate bond issuers, the China Interbank Bond and the China Exempt Bond Market (CBM). The CMBM is dominated by police, financial institutions, commercial banks in the others no bank financial institution accounting for the majority of China's bond trading volume. In contrast, the CMBM is mainly composed of no bank financial institution as China's capital market continues to open foreign. In conclusion, in this paper, we explore a question natural experience based on bond connect in China with offer capable foreign creditors only access to CVM. We examine whether the bond market liberalization offer the tax evidence decisions of bond insurers. We find the offer the launch of bond connect eligible firms experience significant reduction in tax evidence compared with those not applicable by it. This reduction is driven by the role foreign creditors as influence financing. Bueno, para terminar, ese artículo trata más o menos de cómo los mercados, como China promovió como un programa que se llama Bond Connect, como para que los mercados extranjeros se pudieran incorporar al mercado interno y como de esa forma regular más ese tipo de comportamientos, con bonos los cuales se introducían relativamente de una forma que antes no era como tan fácil. China empezó a promoverlo de una forma que si fuera más fácil para la gente del exterior comprar bonos y tener un acceso más selectivo, tener mejores aperturas de marca y tener un mejor movimiento a nivel del Estado, tener un impacto corporativo de mejor calidad. Eso sería todo.